Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to today's Bull versus Bear webinar. Steve Miley here on the call for Trade Day on Wednesday, the 18th of January. Welcome, everyone. It's going to be a little truncated, little shortened webinar in here today, just due to time constraints on my side. So apologies for that before we start. But we'll get through pretty much most of what we need to get through, all of what we need to get through, but maybe just a little bit quickly. And just a little bit abbreviated. So first of all, just to highlight two things in here. One, we have the Trader Mind session in here this afternoon. With James and I, this afternoon. It's going to be this evening in the UK and this evening in Europe, 6 p.m. GMT. And then 7 o'clock if you're Central European time. It's 12 o'clock Central time. So 12 o'clock noon and 1 p.m. if you are on Eastern time. And, excuse me for not knowing then. So then would that be 11 a.m. Mountain and 10 a.m. Pacific? I'm hoping that's right, but I'm not 100%. Time zones in the rest of the US, not my strong point, but I think that's right. James and I, we can talk about goal setting. Part of it was certainly going to be goal setting and how we go about that. So certainly thinking about that. If you have any questions, any thoughts on that, if you have any pre-Trader Mind thoughts or questions, please do send them in to either Steve or James at tradeday.com or info support out, whichever you want to send them to. You can send us to askusanything at tradeday.com if you want. Okay, so that's one thing to say on this page. Okay, and you can access that. You go to resources in the members area, go to the resources tab, go down to the Trader Mind sessions. Okay. The other thing, we use this as our kind of archive for the other Trader Mind sessions and also other videos. And I did another video yesterday. This is it here, the first one, the one at the top, Trader Mind session archives. So in here, I did a session in here with Ninja Trader. On bad trader habits and how to fix them. Okay. If you've done a mentoring session with me, you'll hear some of the things that I probably mentored you and spoke to you guys about. But just in case you want to go into here on the Trader Mind page, as I say, go to resources, Trader Mind. Okay, it's Trader Mind sessions. Scroll down, and it's the first archived one in here. It was with Ninja Trader. Okay, with their what they call it, Traders Workshop. I think the series is called. Let me just double check on the Traders Workshop with Ninja Trader. So I did that yesterday. You can click here and see that on the Ninja Trader YouTube channel. So go take a look at that. Okay, plugs are over. Let's get into the nitty gritty. Probably the biggest development on the overnight has been the Bank of Japan decision. Okay, so we have been flagging that as being notable and important. And if we go to 5 things to start your day in here, Bank of Japan pushback. So if you remember back at the end of last year, and the Bank of Japan unexpectedly shifted from a uber dovish position that they've been holding for over 20 years in here, since the late 1990s, and shifted their policy. They moved their yield targeting across the yield curve, and that was the first hint at them having to fight inflation. The first significant hawkish step that we're seeing, certainly in years, maybe in decades. So that Bank of Japan move in here then set up, and if you take a look at actually I haven't got it here, but I could probably go to it in here. But let me go in this. If I got dollar yen set up, maybe I have, maybe I haven't. Oh, intraday maybe. Let me see if I got that set up. But in here, Aussie dollar yen in here. So dollar yen. And if I just flip this to a daily chart, you'll see that was here, back here on dollar yen. We had this big plunge before Christmas in here. That was the unexpected move by the Bank of Japan. Okay, and then the market has been kind of setting up for more of that. You see, we've sold off in here over the last week or so. And then today, though, the market did spike higher on the back of that. You can see it's spiked higher, but they've given back a lot of that spike higher in here today. So the market kind of really kind of not believing the Bank of Japan that they're maybe not going to, if they haven't done it now, maybe they're going to be doing it later. So just to point that out in here from the Bank of Japan, not massively impacting the markets that we're looking at in here, but nevertheless, certainly a significant development that we've had in here for the Bank of Japan, pushing against speculation of a further policy change, and so just maintaining more of a dovish position. Okay, but the market then reacting as if, well, okay, they haven't done it now, maybe they're going to be do it another point going forward. ECB in here, also potential for a downshift to a smaller pace of rate increases, and that comes from where is it? Yeah, European Central Bank Governing Council member Francois Villeroy de Galhau. Okay, dismissed suggestions that monetary is like to down. Oh, dismissed. Okay, right. So the rumor was that the rumor was, or the leak was that they were going to downshift at the next meeting. We're expecting another 50 basis point rate hike from the ECB, but then after that they would downshift maybe to 25 basis points. Okay, so that's been dismissed, even though that was the rumor. What else do we have in here? So that's been the main development, was this Bank of Japan in here, though. So you saw dollar yen spiking higher. That's yen weakness, okay, on the back of that. And that actually then, the yen weakness then in turn, a weaker yen is positive, remember, then for the Japanese stock market. So the Nikkei rallied on that, okay, for easier monetary policy in itself, okay, is positive for Japanese corporates, because the monetary policy is staying more dovish. So that's a positive, and obviously will continue to stimulate the economy. And then on the second level, the yen in here, obviously initially the yen weakened, dollar yen went up. That's a weaker yen, and that weaker yen is positive for many of those members of the Nikkei. Remember the Nikkei 225, the biggest 225 stocks in the Japanese stock market. Many of those are exporters, right? You like Sony, Mitsubishi, those kind of companies. So they benefit from the weaker yen. So the weakening of the yen saw the Nikkei push higher, and that has maybe somewhat helped US equity indices and European equity indices rebound in here slightly after night. But European and Euro stocks pretty much fairly quiet in here this morning. Yen tumbled against the dollar. We've spoken about that. Okay, and also the pound rose again. The other thing in here we'll come to in here, if we look at the data. This morning we've had where are we? CPI. Here we go. So UK CPI numbers coming in line with expectations, but a dip lower as expected, and the market kind of like that. The pound went higher on the back of that. We've also had Eurozone CPI in here this morning, in line with expectations. Apart from the month-on-month data, was actually beat expectations. So in here, it's in red, showing a negative, but it's actually that's a positive for the market because it's a lower inflation. So expecting a fall of 0.3% on the month-on-month, actually fell 0.2% with the year-on-year data for coming in line with expectations. And then going into today, what do we have? PPI, probably not so important out of the US, more important the retail sales data. So we have that coming up in just under 1 hour. That's going to be the focus for today. And then a little later on today, we also get at 9:15 Eastern, we get industrial production. Okay, so we're watching out for that. And then at 10 o'clock Eastern, business inventories and retail inventories. And mixed in with there, we also get various Fed speakers throughout this afternoon. Bostic, Bullard, and where's another one? Yeah, Harker, all speaking this afternoon at times respectively 9 a.m. Eastern, 9:30 Eastern, and 2 o'clock in the afternoon Eastern. Okay, so you're watching out for those. If you're trading oil, the regular weekly crude oil stock in here comes out at 16:30, 4:30. Watching out for that. Okay, earnings calendar is also actually fairly quiet today. Charles Schwab in here. I don't know if that's been released. I don't see the numbers on here, but that's kind of the biggest company, and PNC Financial maybe, but I don't think any of these are going to impact the indices directly themselves. More important going into tomorrow, Procter & Gamble and Netflix. Okay, I'm certainly watching those. Now, undecided, I'm actually traveling Thursday through Friday. I'm not going to be available to do the webinars, just as a heads up as well, guys. And undecided whether James will be covering those. So we will let you know. We'll give you a heads up in the member site. So watch out, both in the forums. Okay, it'll be up here in the scrolling heads up that we have. Where are we? It scrolls across the top. It's only on the trading room page, right? In the heads up that scrolls across the top, and also in the forums. We'll put that if we are, or if we're not going to be doing a webinar tomorrow, we'll let you know. What else do we have in here? So let's just run through some of the news. UK inflation edges down to 10.5. That was in line with expectations, though. But food prices are still surging higher. 5 things to start your day we've covered already in here. US index futures slightly higher, probably helped slightly by the Nikkei rallying on the back of the falling yen in here. And oil futures pushing their longest streak of gains in 9 years. I think that's back-to-back daily gains in here for oil. So oil pushing higher. That's all on the back of the China reopening trade. Okay, futures edge higher. Earnings underway. United Airlines also rising. What else do we have in here? Bank of Japan defies markets. We've already spoken about that. More on Bank of Japan holds policy, pushes against market speculation. Bank of Japan jolts financial markets, but risk of a bigger shock remains. Okay, so they're saying, yeah, decision leaves Bank of Japan as an anchor for global yields. So what else we have? Oil, we're already spending that. Exchange gains. It bets that Chinese demand will strengthen. And if we look into this morning, European exchanges, not much change. Slightly higher in here. The FTSE is actually flat, 10th higher on the DAX, the German index, FTSE obviously UK, and the CAC, the French index, up about 0.25%. And if we look in here, we did get that dip yesterday. Remember the dip yesterday being driven primarily by Goldman Sachs. Okay, disappointing yesterday. We've had a slight rebound in here between 1/10 and 0.25% higher in here across the Dow, S&P and NASDAQ going into this morning. Let's jump to the charts. I'm not going to spend too much time on that. We've been very, 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 very sideways sitting in here, despite us dipping here on the S&P on the back of Goldman. We held above the previous day, the Monday low. We're currently holding above that Monday low. So if I just step into the 15-minute chart, very much sideways sitting here. Not much you could do with that. The range almost, not much a wider range. If we go back to the daily chart, the range yesterday was not much different to the range we had on the truncated session for Martin Luther King Day. So MLK Day range, the holiday range, not much different to what we saw yesterday. So the market's very subdued. Obviously, all could change on retail sales. I'm just be looking at breakout points. I don't think you have to look much further than the recent highs and the recent lows. I mean, we did see this breakout yesterday. We spoke about that above this counter trend line. I'd be redrawing that counter trend line now. You can see it's almost the same slope, actually. Look, I can just carry that across. So up through the counter trend line, about around 40.23. Otherwise, the peak here, that spike peak, or this peak in here, that peak there, that spike peak there. This morning, that's come from the Bank of Japan. So it shows you there what the driver of the Nikkei higher, the weakening yen drove the Nikkei higher and drove S&P higher here as well. So maybe a break above that high, if not the counter trend line low in here. You've got kind of dual lows in here now. So these two little lows from the last few days. So we have low here at 39.96 and a quarter and 39.96 and 3/4. Through there, clearly going to be a little bit more negative. Those will be watching there on NASDAQ. Same kind of story. So NASDAQ outperforming. Okay, so obviously Goldman's dragging us down yesterday. Slight outperformance in here from the NASDAQ. So another new high yesterday and sitting at the top upper end of that range. So nudging higher. Again, in here, probably more positive. Looking for this positivity from the NASDAQ to influence maybe the broader markets in here, the S&P and Dow. And now you've got a succession of higher highs and higher lows. So if we look at, you've got this kind of this trend line that comes across here, and then probably more significantly, we've got the one that comes up like through here. Okay. So in here, you see, and that's being respected. So whilst above this trend line here, particularly, I think the one that comes up just from yesterday, we've got a succession of higher lows, made a new higher high here as well. So looking for probably now the next level is break of this peak in here, this little overnight peak in here, which we have. There's the Nikkei again. And then you've got this, the subsequent intraday little swing peak. That's up at 11,662.5, up through there, quickly targets the highs. And where can these go? Well, retail sales, an important piece of data. We could easily see NASDAQ up to here, I think, 11,750, maybe 11,800. Where can we go to on the S&P 500? Well, we're sitting right on that 61.8 through there. Doesn't see much up to here. So 40.90 potentially on the S&P, given the data is aligned that way. Let's take a look at the commodity markets. First of all, we'll start off with gold. We said that looking to buy the bounce on gold in here. We did say it hasn't had more than 2 down days. You look all the way back through this whole rally. 2 down days, Monday through Tuesday, dipped and rebounding already. I can't see anything but going long in here. And you can see already, look, so if we redraw this counter trend line, you don't really even need to redraw it. You know we're through this counter trend line. So we're up through there. A succession of higher highs and higher lows, just fading at this peak here. So this little peak in here from a couple, from actually yesterday. The peak there is 1919 and a half. The peak in here has been 1919 and a half. So up through there triggers bullishness for gold. As oil, as it said in here, the winning streak continuing. Another new high in here for oil. It took out yesterday. Actually, no, it didn't quite take out yesterday. This peak in here, this failure peak from the beginning of the year. That was at 81.50. We're up through there now. No reason oil can't push up to these two little peaks here. 82.75 and 83.27, maybe even through those peaks there, top side. And finally, I'll take a look at the treasury market. So a dip and a rebound in here. Again, a little bit of a corrective step back. Market then rebounding strongly, impulsively this morning, and can only really see upside in here for the treasuries. This is the 10-year note. I mean, although we're kind of breaking through this line already in here, if I redraw this line, I'm just going to get rid of that. But, we've already obviously broken through this. Any kind, if we bring a counter trend line across the top in here, clearly we're up through this, right? And it's kind of stuttering at these peaks in here. So I think back up through the recent peak is enough, right? High highs in here. And you can see that impulsive move higher. That was, again, on the Bank of Japan, okay? Obviously, leaving yields lower, okay, in Japan. In here, allow and saw a rally, support for the Japanese government bond market. Japanese government bonds rallied on the back of that inaction from the Bank of Japan and took global bonds higher, including obviously the treasuries. So in here, I'll be, we're already broken above here, just back up through the recent peak, up through 130.25, I think there, just signals quickly for a move up to the peak there and stepping back out. If I go back to the in here now, there's not a lot on the top side. Okay, we're back into some poor data here. So on the top side, not much in here. We're going into multi-month high prices, low yields. Okay, so lowest yields it'll be since September if we break above the more recent peak, and certainly looking for a potential challenge there. Let's go and take a look at that on the yield chart in here, which I think I have. US 10-year yield chart. Okay, if I go to a 1 month chart. So we're seeing, but obviously the market in here, this is only got up to, where are we? Let me see if I can get this as an interactive chart and see if it updates for today. 10-year bond yield. Slowly updating. So yeah, pushing down to back this today to lower yields. So down through the low yield here is 342. The low yield over here is 340. So down through 340. And if I zoom out here, you see that puts us to the lowest yield point since the middle of September. Okay, so significant if we break down through 340 in yield. Okay, could open up a far bigger push to lowers. And this is part of the reason, this push to lower yields and the aggressive push we're seeing this morning to lower yields, why the Nasdaq's outperforming. Remember, lower yields, more positive for growth stocks. Okay. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do keep an eye on the activity feed as to whether we will be having a webinar Thursday/Friday, the daily webinar. And please do join us for Trade of Mind. That's, remember, in here, just as a quick recap, refresh in here, 12 o'clock Central, 1 o'clock Eastern, 6 o'clock UK GMT, 7 o'clock Central European time. Hopefully see you then and send any questions. I'm looking forward to it. Till then, take care, stay safe, and have a great trading day. Bye.